Last week was something of a roller coaster ride, and it's probably worthwhile looking back at the events of the week just to see some of the influences on the New Zealand economy and of course on farmers' take-home income. Starting off the week, we had pessimism, with Standard & Poor's downgrading a number of European countries. That had an impact on the currency, driving it up against the euro. The following day, we had news from China in terms of its growth for the final quarter of 2011, and that was good news, pushing up the Kiwi against the US. The following day, we had the Consumer Price Index information released by Statistics New Zealand, and that showed the Reserve Bank has a large amount of room to manoeuvre in relation to the OCR. In fact, we don't see an increase in the OCR potentially until around about December, which is good news for farmers. For the rest of the week, we saw optimists outnumber pessimists, as green shoots recovery signs in the US, as well as smooth bond sales in Europe, strove to drive up markets across the world. In fact, the Dow ended up one of its best days for the year, up nearly 100 points on Friday. Looking at currencies over the weekend, the Kiwi strengthened against the US, trading at around 80.5 cents. It was also up against the euro, breaking back through the 62 cents European mark. Looking at beef markets now, demand in some of our primary Asian markets continues to be pretty soft going into the Chinese New Year holiday. In Japan in particular, prices for premium beef have continued to fall. This is putting downward pressure on processors' margin. But it's in stark contrast to what's going on in the US, where, as expected, prices for beef, both bulls and cows, is increasing rapidly off the back of Super Bowl week. What does this mean? Well, at the moment, prices are almost at all-time highs in the US. However, there is still one concern for New Zealand farmers, and that relates to the US dollar and its strength against the Kiwi. We'll be hoping that green shoots recovery from the US will have the effect of driving down the US dollar against the Kiwi, thereby increasing New Zealand farmers' incomes.